What processes are carried out in an audit?
The process that an audit requires are based on the scope of the audit. If the scope of the audit is a full audit report, then the first step that goes into the audit is the planification, was to create a plan for addressing the particular areas of the financial statements that will go on a specific review. So the first step, like any strategy, is to create a plan. That's called the audit plan. In this audit plan will be a distribution of the hours that each of the activities, each of the reviews in a particular account will be given, and what areas of the company and the financial statements of the company will need a more in-depth review, like a deeper review, and that will obviously create a larger number of hours for that purpose. In addition, there is also in this audit plan the human resources that will be needed to comply with the requirement of the review and investigation as per the number of hours that have been planned before. So it's basically a report of activities, a report of time, and a report of human resources needed for the execution and the distribution or the delivery of the actual audit report. This is the plan. Once this plan is created, then it goes to the second step or the second phase, that is the execution of the plan. In this plan, it's not in the execution. We're not going to say in the execution we're going to review X or Y account. It is in the plan. The plan says what are the particulars of the account that needs to be reviewed, and in the execution we only follow the plan. Many times, remember that if we have hours and we have human resources in the plan, we will have cost, and that's how cost is allocated for the client. So if there are issues that have not been revealed or issues that are encountered during the process of the execution, then the auditors usually go back to the plan and increase the number of hours, but that will be more cost for the client. So it is a good idea that the moment that the audit plan is created and there is a questionnaire, a lot of questions for the client that are given for the client to answer, and then those answers go by the account, it's good to have a good relationship between the client and the auditor to have all the answers correctly and in deep. So the auditor doesn't have to go back to the plan and increase the number of hours that will take effect in the cost of the actual process of auditing. Once there is in the execution phase or step, the auditors will have to find what is called a range or a ratio of tolerance for errors. So let's say that there is no 100% auditing unless we audit every single line, every single transaction of the financial statements one by one. It will only be possible a 100% ratio of non-errors, but that doesn't exist yet. There is an advance in terms of artificial intelligence, and that's something that we are applying. Artificial intelligence is able now with a software to review all the transactions. It's able to review because software are now very parametric. They have specific parameters that when we use the artificial intelligence software, these parameters are able to be used to detect the errors automatically. But remember, we are detecting millions of transactions. We are reviewing millions of transactions through our software, through artificial intelligence, And it is possible now to do 100% review, like having 100% assurance of errors. Now it is possible. In the past, no. In the past, we have to create a range of 95%, 96%, usually preferable 95%. And in that, with that ratio of the transactions that we used to review, we didn't review all the transactions. We select a block of transactions to review. That will be the sample. Okay, we select a population, and within that population, we will do the review. And that will have to give us a 95% ratio of assurance, meaning that anything above above 95%, that's fine, but it cannot come below 95%, because if it is 95%, we have to do more work, and that will be costly for the client, because it will be more hours. So the idea before is to establish what's called a coefficient or a percentage of acceptance of error for the transactions. And then we apply analytical procedures, meaning that at the analysis of analytical procedures, doing all the procedures and review the transactions. It is there where all the mistakes are discovered. And if those mistakes are listed, and at the end, those mistakes are given to the client to be fixed. And then next year, the client has to prove that they have been given. Otherwise, we will not be able to issue, we'll have to review them again to issue an opinion, because the objective of the accounting report, the auditing report, is the issuance of your opinion. It's my opinion that the financial statements are correct. They do not present the number of errors that will compromise the materiality of the company. So this process at the end, once the analytical procedures are created, are performed, then the accountant, the CPA, is satisfied with the examination, and that satisfaction will provide an opinion, and that opinion is the report. That is the process. Anything start with a plan, then the execution, and finally the giving of the report.